Gareth Taylor is now with me. He's sales trader at Securities Africa. He's in our Johannesburg studio. Let's talk about the best and worst performing stock exchanges. Zimbabwe is at the top of that. Zim Mining Index up quite considerably. But what I want to touch on is the fact that there's a likelihood that 51% local shareholding might be reversed.
Yes, that's correct. There's been talk of that. It's obviously very positive for the market as a whole. This is just talk for this stage, so the proof is obviously in the pudding, and we'll see if this actually transpires. But yes, that is one of the major concerns that investors have. I think a lot of the valuations and the prices that you're seeing have priced in this political risk and political interference that we see in Zimbabwe. But should this actually come about, yes, obviously very positive for the market.
So that would be a very significant one. The other one that is worth talking about is the midterm budget, especially with a stagnating economy. What were your thoughts on that, and perhaps an outlook?
I don't think there was any surprise there. There wasn't that much to take out of it. I think investors were looking for some sort of stimulation for the economy from the government. I think their hands are rather tied right now, given the state of the economy. So we're going to have to look at more moves from the monetary policy side of things to try and stimulate the economy. There is talks of a fund of last resorts being put in place. Hopefully this will mean that the interest rates that are being charged by lenders in Zimbabwe at this stage, which are up to 35%, will be reduced, and hence provide some sort of stimulation to the economy, allowing a reasonable rate for your market or for your market players to actually lend money and invest in the economy.
All right, something on the political front. The European Union actually a few hours ago lifting curbs on the EU aid to Zimbabwe, and that is just to try and help the prospect of removing sanctions on Zimbabwean officials to try and encourage political reform. But elections coming up is always something a lot of people look at, isn't it?
Yeah, I suppose even the issues that we've just spoken about might be coming about, might be talked about to try and get political favour. As you go ahead, and specifically if we're talking about market performance, that's a massive danger. The upcoming elections, which are scheduled for hopefully mid-year next year, if all the reforms in terms of the constitution, etc., are completed. So yeah, I mean, from the market's point of view, massive concerns in terms of what's going to happen politically. We are well aware of all the shenanigans that have happened in the past, and the risk is obviously that that and the violence, etc., that goes with it heightens towards the elections. It is a massive policy. I mean, a massive positive for the market.
All right, let's move on.
That this has happened.
Okay. Let's move on to the second best performing, which is Egypt. Not too much activity right now because everybody's expecting that all-important court ruling, isn't it?
Yes, well, the court ruling actually happened last week. The court ruling was due for Tuesday, and unfortunately on Tuesday it didn't come out, which obviously heightened all the concerns that we had seen in the market. Thank goodness on Thursday the court ruling did come out. This was favourable. I think what we're finding is that international investors are still very concerned and sceptical as to what's going to happen, but the positive movement in the market was largely driven, almost entirely driven, should I say, by the locals. They perceived this to be very positive, and straight away they dived into the market, picking up stock at what were rather low valuations at that time, rather low prices, should I say.
The other performer there is Morocco. We're going to skip over that and go into Nigeria, which is awaiting corporate results, and what is the likelihood that we will be seeing from that?
Corporate results began, it's quite some time now, it's probably 10 days ago that the likes of UBA and Diamond Bank released their results. UBA from the top tier banking sector, and the results were very good. We saw improvement in revenues, and this translated to improvement in bottom line. This was very much the same in terms of Diamond Bank, but subsequent to that we haven't seen any results, or we've seen very few results coming out. It's just Skybank and Ando have released results subsequent to that, both of which were a bit disappointing. I think the market is still anticipating positive results from the majority of the top tier and bottom tier banks, and as you and your learned listeners will know, this is largely where the market in Nigeria is driven. So for now, the market has reverted back to the low volumes that we've become used to over the last couple of months, but hopefully these will pick up from a broker's perspective at least in the near term when the further results do do get released.
All right, Gareth, let's touch very quickly on the worst performing ones. Zambia at the top of that. You're saying it's largely illiquid. How so?
Yeah, we've seen very little activity. It's an illiquid market as a generalization, but it's been even more illiquid of late. I'm not sure exactly what the explanation for that is. It's been quite peculiar. We actually saw at the end of last year, the last week in last year, in fact, the market increased by something like 10% with no real reason behind that, and I don't know if the market is just waiting to kind of catch up to that. So yeah, incredibly liquid market, not much foreign interest at this stage.
All right, and another one which is interesting right now is Mauritius. There's concerns now about the Eurozone crisis again, quite seriously, and Mauritius is very well exposed to that.
Yes, the problem with Mauritius is that it's really, really closely aligned with Europe. We actually have quite a few of our African and frontier fund managers who ignore Mauritius because of this fact. A lot of the input costs that you see in Mauritius are US dollar denominated, and a lot of the revenues, particularly coming from European foreign travelers, are still priced in euros. So with the depreciation of the euro, obviously further pressure on the revenues that they're earning there, as well as the state of the European markets, which is largely where their exports are going and where the majority of their foreign tourists come from.
We'll leave it there. Many thanks, Gareth. Gareth Taylor, sales trader at Securities Africa, with us in Johannesburg, talking about the best and the worst performing stock exchanges.